Before we start this video, do like and subscribe to our channel and not miss on any updates.
Another very important chapter and a very easy chapter, I would say. We'll start with Accounting Standard 12 that deals with accounting for government grants. Now, typically what happens is government, they want to encourage enterprises, they want to encourage companies to set up factories at some locations. They will give a lot of allowances. You would have learned about this in income tax as well. Some special depreciation allowance is given. When you invest somewhere, some deductions are given. Another way in which government promotes enterprises is by giving grants. So say for example, there is a backward area. Nobody wants to go and set up a plant there. Nobody wants to set up a factory there. When factories and all are set up, you have a lot of employment opportunities. So what the government says is, okay, you don't want to set up on your own. You invest money. Let us say you invest 100 crores in that particular factory or in that particular plant, in that particular area. And out of this 100 crores, maybe let us say 30 crores, I will give you as grant. I will give you cash. Or they may say, I will give you land free of cost. I will give you land free of cost. At a lot of places which are upcoming, government comes in and says, take this land at free of cost or at very nominal value, build your enterprise, generate employment so that the area progresses. So that is the idea behind government grant. So government grants are assisted by government in cash or kind to an enterprise for past or future compliance with certain conditions. So they are not saying that we'll just give you a grant. They're saying we'll give you a grant provided you do certain things. Build a factory. Sometimes they have a condition that you need to generate employment for, let us say, 100 employees every year. That could be one condition. Or they may say you have to do this kind of processing, or you have to build this kind of technology, something. So assistance by the government in cash or kind. Now when we say in cash or kind, it means either they will give us money or they will give us something in non-monetary form. For example, I told you land. So if the land is being given free of cost, right? If land is being given free of cost or land is being given at a nominal value, there is an element of government grant. And very important, there are certain conditions which the company or which the entity must comply with. Now these conditions can be past conditions. The conditions can be future conditions. Past condition means the government says you set up a plant. After the plant is inaugurated, I will give you 30 crores. That is a past condition. Future condition could be like you create a plant, have employees or employ minimum 100 people for the next 3 years. So that can be future conditions. Now when we say government, what does government include? Government includes state and central government, government agencies and similar bodies. So it is like local government or that's the central government, then the state government of the respective state, then it could be the municipal corporations, it could be the municipality, any other local authority, whether it is local, national or international. Meaning to say, if there is a body which is international body, let us say United Nations kind of a body, that also is covered as government for your accounting purpose. Anyways, for examination, all of these will not be tested, but good to remember the definition. Okay. Now, very important here, what are not government grants? I gave you a couple of examples of what are government grants. Now, what are not government grants? Which the assistant which cannot reasonably have a value placed upon them. Now, what is the meaning of this? If government is giving me some assistance, or if the government is giving general assistance to all the companies on which I cannot put any value, that is not a government grant. For example, the government says, you set up a factory, I will build a road to the factory. You set up a factory, I will build a road to the factory. Now government is giving me an assistance, government is spending money to build a road, but I cannot put some value on that because that road is a public road. So that cannot be called a government grant. And the transactions with the government which cannot be distinguished from the normal trading transactions. So if the government buys and sells, let us say I am a company, I manufacture computers. Government purchases computers from my company. Now this trading transaction is not covered under government grant. Right? Then trading activities are excluded from the scope. Any tax holidays or exemptions, so this is more from your income tax purpose, those are also excluded from the scope. If the government is participating as an equity holder, if the government invests in my company, that is not called a government grant. Sir, if the government gives me grant or money which need not be returned back, that is a government grant. But if the government is a shareholder, for example, government recently converted share, dues from Vodafone Idea into equity. Now that there the government is acting as a shareholder, it is not a government grant, and any sales tax related exemption, that is also not covered. So these are the exclusions which you have to remember, important from MCQ point of view, and these also you have to remember from MCQ point of view, right? Okay. Now, moving forward, before we take it in the accounting terms, when we talk about government grants can be capital in nature or revenue in nature. When I say capital in nature, something related to capital or assets. For example, grant which is given against a fixed asset, that can be your capital grants. Revenue grant means the government says, for example, you carry out some research, and I will give you 10 crores after you spend the money on research. So this is a revenue grant. So there are two types of grants which are possible. Accounting is pretty simple for both these types of grant, whether it is capital or revenue. In examination, what they do is, typically the questions they ask is, there is a grant related to a fixed asset. This grant becomes refundable. So these type of questions are generally asked from accounting standard 12, right? Now, coming to the accounting treatment, when can we recognize the government grants? When we say recognize the government grants, what we are saying is, when can we record government grant in our books? There are two conditions. Remember these two conditions. First, the enterprise must have met the conditions or must have the ability and willingness to meet the conditions related to the grant. So first thing what you are saying is, there are some conditions. These conditions either you have already met or you expect, you have a reasonable assurance that you will meet those conditions in the future. So one thing is certainty towards meeting of conditions. Past conditions already met. If it is a future conditions, the entity believes that we will be able to meet those conditions. That is the first thing. Then the grant should be sanctioned and certain to be received. There is a reasonable certainty that we will receive the grant. So these are the two conditions that the entity must fulfill. Only then you can recognize the government grant. Right? Now, just because, very important, just because we have received the grant does not mean that the grant can be recognized. When we say recognition of grant, what we are saying is, whether we follow the capital approach or whether we follow the income approach, subsequently we will understand that. When we receive the grant, when can we record that yes, we have received this grant, or as a grant, when can we recognize it in our books, right? So that can be done only when the conditions have been met or will be met, and there is a certainty, there is a reasonable certainty that we will receive the grant. These two conditions should be satisfied. Receipt is not a condition. Just because we have received the grant does not mean we should recognize the grant. Recognize means passing the journal entry. Now, grants are of two types. Accounting treatment are also two categories. One is capital, one is income approach. Okay. So when we say capital approach, we treat the grant as a part of shareholder funds. We will see in which categories does it come into picture, or we will set up something called as a deferred grant account and we will do the accounting for it. That part you can, you need not put so much of focus on it. Main focus is types of grant and their accounting treatment. First one is non-monetary government grants. Monetary grants are those which are in cash, which can be measured in terms of cash. Non-monetary are those which are not in terms of money. For example, again, free land, or land is costing 100 crores, government says I will give it to you at 40 crores. Two scenarios are possible. One is free, second one is at a concessional rate. If the grant is given at concessional rate, means at a discounted price, then you will account for it at their actual acquisition cost. What does that mean? 40 crores is the price that I have to pay. The value of the land is 100 crores. So there is a government grant element. The standard says if you're paying 40 crores to acquire the land, you record it as land account debit 40 crores to bank 40 crores. That is how you have to do. Okay, and subsequently, of course, you will not depreciate that because land is not a depreciable asset. If you receive non-monetary grants at free of cost means you don't have to pay anything. The government says this land is yours from today. In that case, what do we do? In that case, we record it at something called as nominal value. Nominal value means either 1 rupee or 10 rupee or 100 rupee. Some nominal value we will record. Sir, why do we record it at nominal value? So that in the financial statements we can show, yes, there is a land at a nominal value of 100. Okay. How does it help the user to understand? The user will get to know that this company has received a grant. This company has received a grant or received land at free of cost. Okay. So these two things you have to keep in mind. If it is non-monetary grant, if it has concessional rate at acquisition cost, and if it is free of cost, then you will record it at nominal value. Nominal value can be rupee 1 or something. Then second category of grant is grant related to specific fixed asset. Grant related to specific fixed asset means I have a plant or I purchased a particular machinery. The government has given me grant against this specific plant and machinery. The government has given me grants against this specific plant or machinery. I can identify that particular plant and machinery. In that case, how do we do the accounting? If it is related to fixed asset, there are two ways to account for it. Number one, you can follow the reduced cost approach. Number two, you can follow the deferred income approach. That is what is important. Okay. So, if there are grants related to specific fixed asset which has been identified, you can follow reduced cost or deferred income approach. Now, sir, what is this reduced cost approach? Reduced cost approach basically means, say you have, let's take this example itself. No, not this example, sorry. I'll put my own example. Let us say the plant costed 100 crore. Cost of plant is 100 crore. Now, when I have paid 100 crores to acquire the plant, the first entry that I will pass is fixed asset account debit or PPE account debit 100 crore to bank 100 crore. I have paid 100 crores. First entry, like we pass any normal purchase entry, I will say debit property, plant and equipment and credit cash or bank. That is the first thing. Then, out of this, government has given us a grant of 40 crores. Government has given us a grant of how much? 40 crores. Then, that thing what we'll do, we'll debit the bank account by 40 crores, credit government grant account by 40 crores. Right? So, first entry, normal purchase entry. Second entry, recording of the grant entry. Don't try to combine this entry because that does not make a logical sense, because this is a different transaction. This is a different transaction. Okay. In examination, each of the entries will carry half to 1 mark. Each of these entries will carry half to 1 mark. And even if you are not able to solve the full question, by passing 3-4 entries also, you can score good marks. Right? So, fixed asset to cash or bank, bank to government grant account. Sir, what if the grant has not yet been received? If the grant is receivable, then what you will say? Government grant receivable account to government grant account. Means instead of bank, you will use grant receivable account. So, clear with the two entries? First, recording of the grant, recording of the purchase. Second, your what do you call, receipt of the grant. Then once this government grant account, or once you have received the government grant, what do we do with this government grant account? This government grant account, you will debit and you will credit fixed asset by 40 crores. 40 crores. In effect, what is happening is, out of this 100 crores recorded here, 40 crores is being reduced from this 100 crores. Or what you can directly do is, instead of recording this, you can say bank account to fixed asset account also. But that does not give clarity in terms of why are we debiting bank and crediting fixed asset directly. So first, record the fixed asset entry. Second, record the receipt of grant entry. Then third, transfer the government grant to fixed asset account. Right? So what happens is, from this 100 crores, 40 crores is credited. So in your books, your value will be 60 crores only. And on this 60 crores, we will charge depreciation. On this 60 crores, we will charge depreciation. This is called reduced cost approach, or we are reducing the grant from the cost of the asset. Now the 60 crores, assume for a moment, the life of the plant is 10 years. Life of the plant is 10 years. So 60 crores divided by 10, every year you will charge 6 crores of depreciation. Every year you will charge 6 crores of depreciation. That is called reduced cost approach. I am repeating once again. First, you will record the fixed asset at its normal cost. Then you will record the entry for grant. Then you will set off the grant against the fixed asset. Depreciation will be calculated on net value only. Right? That is called the reduced cost approach. Second one is deferred income approach. Now, what is the meaning of deferred income approach? Instead of reducing from the cost of the asset, what I will do is, I will account for it in an account called Deferred Government Grant Account. So first entry, this 100 crores will remain the same. Second entry, cash account debit 40 crores or receivable account debit 40 crores to Deferred Government Grant Account 40 crores. I will not transfer this government grant account to fixed asset account. I will show it separately. I will show it separately on the liability side. Then depreciation, in the previous example, we charged on net amount. Depreciation we charged on net amount. Here I will charge depreciation on gross amount. Gross amount of 100 crores. So 10 years was the useful life. Depreciation will be 100 divided by 10, that is 10 crores. So every year 10 crores of depreciation will be charged. Every year 10 crores of depreciation will be charged. Here we charge depreciation of 6 crores. Here we are charging depreciation of 10 crores. Now what we will do is, after this deferred grant account, from this account periodically we will transfer the amount to P&L account. That is why it is called deferred income approach. We are deferring the income. So how do we do that? Out of this grant, we will take the ratio of depreciation. Whatever is the ratio in which we charge depreciation, in the same ratio, every year, this 40 crores will be transferred to the income statement or P&L. Now in this case, 40 crores, every year we are charging 10 crores, means every year we are doing equally. So what you can do is, 40 divided by 10, 4 crores will be reduced from the grant and 4 crores will be transferred to P&L. Or what you can do is, directly the way you depreciate fixed asset, whatever rate you apply, for example, if it is 10% rate or 15% rate, WDV basis, whatever is the basis, same rate you can apply to the deferred government grant account and calculate this particular amount. So in effect, in the P&L, if you see what has happened, here we said 10 crores of depreciation, and here we are saying 4 crores of credit to P&L. So 10 minus 4, the net impact is 6. Here also the net impact is 6. This is one thing or one area which is consistently, whenever you get a question from government grant, it is tested in the examination. Is this clear? Any questions here?
Sir, your picture is not in proper way, sir. In YouTube it is clear, but in Zoom it is just like blinking, sir.
Blinking?
Just like that.
Just a moment. Okay, but just a moment. Blinking as in, is it distracting? Something like that?
Yeah, your picture is it's like striking some. In YouTube, it is clear. Yesterday also in Zoom, it is in the same way.
Okay, but no. So that is, I will have a look at it because I don't know what has happened because of this. It is slow. When I move, it is slow, correct?
Yeah, right, sir.
Okay, but is the audio clear?
Audio and the picture, the PDF presentation is clear. Only your picture is not in proper way.
Okay, so ignore me for a moment. No, think I'm not there. I'm just speaking. Does that help?
Yeah, sure.
Because see, ultimately the content has to get inside your head. Don't get distracted because of me. Okay, I'll reduce my, you know, what do you call this thing slightly. Further, I'll reduce it so that it doesn't distract you more. Sometimes it happens. Okay, not in our tech things, no. So ignore that. Don't focus on me. Focus on what I'm writing and what I'm speaking. Concentrate on that. If unless it is very much distracting,
Okay, sir.
it is not very much distracting, right?
Yeah, okay, sir.
Okay, so we'll see what can be done.
Please off your picture, sir. It is.
No, that's what I'm saying. I'll reduce the size of my picture slightly. Okay, just right side small corner, so you can.
It's 10:30.
Because a picture would be needed if we have to. There are other students who have enrolled for it who will be watching it on a recorded basis. So that way.
Okay,
So ignore that right side bottom. Some person is there. Just ignore that person. Focus on the screen. What I'm writing. Okay. Is it clear so far?
Yes, sir.
Yeah. Okay. John, we'll continue. So two methods, and these are the methods which are generally tested in the examination, right? Now, one thing is this is depreciable fixed asset because you charge depreciation, and that is how you do the accounting. If it is non-depreciable fixed asset, then what we can do? Generally, for non-depreciable fixed asset, we will either reduce from cost, the first category where we have we can reduce from the cost and do it on the net basis. Second, another option that is given is you can transfer it to capital reserve account whatever grant you receive, but this generally, again, as I told you, is not tested as far as the exam is concerned. But what you need to understand is, if it is non-depreciable, you can reduce from the cost and show it at a net basis. You can show it on a net basis. For example, there is a land 100 crores and you have received a grant of 40 crores. Land you can show on a net amount of 60 crores. That is the first thing. Sir, I don't want to do that. I want to follow deferred income approach because we don't charge depreciation. What you can do, if the conditions are already met, you can transfer that to capital reserve. So if it is non-depreciable and conditions are already met, you can transfer the grant received to capital reserve. But a better option would be to reduce from the cost, that is follow the reduced cost approach. Second option is if the conditions are to be met in the future. Now what does this mean? Let us say we have purchased land and some conditions are to be met in the future and we have received the grant against this land. So the cost of the land is 100 crores. We have received 30 crores of grant. We have received 30 crores of grant. One is you can reduce it from this amount itself. If you want to follow deferred income approach and if the conditions will be met in the future, then what you can do is whatever is the expense on condition, in that ratio, you can transfer this 30 crores to P&L. For example, you have received 30 crores here, 30 crores here. The grant has been received. Now, I have to spend some amount to meet the condition. Let us say 5 crores in the first year, 10 crores in the second year, 15 crores in the third year. Or just a moment. 5 crores in the first year, let us say 10 crores in the second year, and 5 crores in the third year. That is what I have to spend to meet the condition. Then what I have to do, this 30 crores, I will split in the ratio of 5 is to 10 is to 5, or 1 is to 2 is to 1, or 30 crores divided by 5 plus 10, 15, plus 5, 20. 20 multiplied by 5. So this becomes 5 fours are 20, 7.5. So 7.5 crores I'll transfer in the first year, 7.5 crores I'll transfer in the third year, and 15 crores I'll transfer in the second year. Basically, if it is a non-depreciable asset and conditions are to be met in the future, from the deferred grant account, we'll transfer to the P&L in the ratio in which the expenses are incurred. If the conditions are already met and you want to follow the deferred income approach, you will directly transfer that to capital reserve. This is not very important as far as non-depreciable asset is concerned. More important is your depreciable assets. Okay. Now, before we get into that, let us see how do we handle refund of government grants. Okay, refund of government grants if it is a capital asset or if it is a specific fixed asset. So we have seen accounting of fixed asset. Now we are seeing what happens when there is a refund of the grant. So if the grant is relating to a specific fixed asset, what is to be done? And before I get into that, what you need to understand is if it is refundable or a grant becomes refundable, then what you need to do is whatever is the original entry, you should reverse it. Very, very simple. Whatever is the original entry, you should look at how do I reverse that impact. For example, fixed asset was purchased at 100, you received a grant of 40. Now you have to refund, let us say 20 crores because you did not comply with the condition. Then what the standard says is, initially what did you do with the grant? Initially you credited the grant to fixed asset, you reduce the value of fixed asset. Now when you are refunding the grant, you say I will increase the value of fixed asset. So fixed asset debit 20 crores to bank 20 crores. So whatever impact you have given earlier, you will exactly reverse that. Okay. Second, sir, we did not reduce it from the cost, we have taken it to deferred grant account. Means what? You have said when you got the grant, you said bank to deferred grant account. Let us say 40 crores. 40 crores. Now you have to refund 20 crores. What will you do? You will say deferred grant account 20 crores to bank 20 crores. So whatever entry you have passed earlier, the same entry you have to reverse now. Sir, what if the balance is not sufficient? In deferred grant account, we don't have 20 crores. We have only 5 crores. So what you will do? You will say deferred grant 5 crores to bank 20 crores. And where will we take the difference? The difference will be taken to P&L 15 crores. Difference will be taken to P&L 15 crores. So when you are refunding a grant, you have to see what did you do originally and now you have to exactly reverse that. Okay, that is for specific fixed asset. So whenever there is a reduced cost approach and if you refund the grant, you will debit the fixed asset account and you will credit the bank account. Here, there is no need to check what is the balance there or not because whatever you are refunding directly gets added to fixed asset account. Whereas, if it is a deferred income approach, then you will debit the deferred grant account to the extent of balance, whatever balance is available. If balance is not sufficient, you will take it to P&L, extra payment, and credit to bank. Okay, so this is how you will do when it is a depreciable fixed asset. If it is a non-depreciable fixed asset, then if earlier let us say you have credited to capital reserve, the refund will be debited to capital reserve. If you have earlier credited to fixed asset, a refund will be debited to fixed asset. Okay. Now what we'll do is we'll take up a question. This one. This will give us conceptual clarity on how to handle the questions related to refunds. A Limited purchased machinery for 40 lakhs. Useful life of 4 years and residual value 8 lakhs. So 4 years is the useful life, residual value 8 lakhs. Why did they give us residual value? For us to calculate depreciation. Government grant received is 16 lakhs. So we purchased for 40 lakhs and 16 lakhs is the grant. This is the grant. This is the cost. Show the journal entry to be passed at the time of refund of grant and the value of fixed asset if grant is credited to fixed asset, grant is credited to deferred grant. Now in this type of question, first very important thing is your working note. First important thing is working note, because they have said pass at the time of refund of grant. So what we'll do, for our understanding, we will pass entries also at the time of receipt of grant. So when we initially record, what we will do, we will say when we initially record, what we will do, first is fixed asset debit 40 lakhs to cash. How much? Sorry, 40 lakhs only, no? Okay, then you have received grant. What we will do, you will say bank or cash debit 16 to government grant 16. Then you will say government grant debit 16 to fixed asset 16. In effect, what we have done, we have taken it to fixed asset, we have credited 16. That is the original entry. You don't need to pass this for the exams. When we are refunding the grant, if you have credited to fixed asset, what we should do? We should reverse this entry. We should say fixed asset debit 16 to cash 16. So refund of the grant, if the grant has been reduced from the cost, you will increase the fixed asset cost and you will credit cash. So the first entry is fixed asset 16 to cash 16. That's the first thing. Second is okay, so here I think in the question it is missed out. The grant is refunded at the end of second year. Okay, so my miss here. Grant is refunded at the end of the second year. So the working note that you need to do is carrying amount at end of second year. So first is cost. Cost is 40 lakhs less. What is the grant received? Government grant received is 16 lakhs. So 24 lakhs is the net cost. Net cost is 24 lakhs. On this 24 lakhs, you will charge depreciation. Now for depreciation, they have said the useful life is 4 years. Useful life is 4 years. So this is the net cost. Residual value eight lakhs is there. So if residual value is 8 lakhs, depreciable amount is 24 minus 8, 16 lakhs. 24 minus 8, 16 lakhs. So depreciation per year, or you can directly calculate, it's a simple calculation. Depreciation for 2 years, first year, second year. Please be very careful with the dates. Okay, so sometimes what happens is it is given 1st April, 31st March, we may get confused. 2 years depreciation is 16 lakhs divided by 4 useful life multiplied by 2, which is 8 lakhs. Now tell me, what is the carrying amount at end of second year? Can you calculate and tell me? What is the carrying amount at the end of second year? Can you calculate and tell me? 16 lakhs. 16 lakhs, right? Now, here, a lot of times, sometimes what students do is when they calculate, they will take the mistake that students do, and I've seen this happening because this is a standard question that we get. They will take 16 lakhs and they will reduce 8 lakhs. Don't do that, because from this net value, whatever you have calculated, from this net value, you have to reduce this depreciation and calculate. So, carrying amount is 24 minus 8, which is 16 lakhs. Now, when we refund the grant, what we should do? Earlier, we reduced from the fixed asset. Now, we will add it back to the fixed asset. Very simple. So, fixed asset, debit 16 lakhs to bank 16 lakhs. This is the refund entry. Now, what is the carrying amount after refund? Carrying amount after refund is equal to 16 lakhs plus 16 lakhs, 32 lakhs. Now, how much should be the depreciation? So, again you have to calculate what is the depreciable amount. Depreciable amount is 32 lakhs minus 8 lakhs, 24 lakhs. Don't forget this residual value. Okay. So, what if residual value changes? Then accordingly we will take the changed value. Depreciation per year is equal to 24 lakhs. Now 2 years are left, divided by 2. So, we will get 12 lakhs per year. Okay. So, that is how you have to do the calculation. So, we can see original cost, grant received, carrying amount, residual value, depreciable value, useful life, depreciation per year for 2 years, add 16, get 32. Right? That is the first thing.
In question is some information is missing, sir.
Yeah, the 2 years information is missing. I'll get it updated.
Okay, sir.
So, they said the grant has to be refund of grant at the end of 2 years. So, here 2 years is missing. But conceptually, if you understand, most of the questions in the examinations are based on this concept only from accounting standard 12. Most, not everything, most of the questions. Okay. Then, if the grant was credited to deferred grant account, what is to be done? Now, please understand. If you take it to deferred grant account, we have taken 16 lakhs. Now, from this 16 lakhs, every year we will transfer some amount to the P&L. How much should we transfer? For examination, just remember, if it is SLM method, amount transfer will be equal. If it is SLM method, every year you will transfer the same amount. Okay. If it is WDV method, so I'll just give you an example of WDV. If it is, let us say, WDV at 20%. So what you will do? Amount transferred will be 16 lakhs into 20% in the first year, that is 3.2. In the second year, 16 minus 3.2 into 20%. So like this you can do the calculation. Okay. So that like this you can do the calculation. Now here, because it is SLM, amount transferred to P&L every year is equal to 16 divided by 4, that is 4 lakhs. So total amount transferred is equal to 4 into 2, 8 lakhs. What is the balance? Balance in deferred grant account is 8 lakhs. 16 minus 8. Now how much did we refund? We refunded 16 lakhs. So when we refunded 16 lakhs, the entry will be to bank 16 lakhs. Initially we credited to deferred grant account. So now you have to debit it to deferred grant account. So deferred grant account. Can I debit 16 lakhs? I cannot, because it is restricted to 8 lakhs. So deferred grant account I will debit by 8 lakhs. Any shortfall will be taken to P&L, which is 8 lakhs. Is the refund clear? Is this two set of entries clear? Or if you have any question, I can address that. Okay. Make sure you revise this concept before the examination. I know you would have already done it, but mostly if you see from accounting standard 12, this is the type of question you will get in the exam. And see, these questions we may ask for about maybe 6 marks or 4 marks, depends on the examiner. we can score 6 out of 6. Even if it takes 2 minutes extra time, 5 minutes extra time, you are sure of the amount that, not the amount, the marks that you're going to score. So the order of the standards, what we're doing is, the standards first where we can get maximum marks, out marks is possible. If I tell you A is 18, if I tell you let us say A is 19, A is 15, there can be some confusions, there can be some interpretation issues. But in these standards, questions are straightforward. So first you should target to get maximum out of these standards or questions from these standards, and then move to other standards. I'll also show you the exam question subsequently, like we have done in the previous class. Okay, so we are done with the grant accounting if it is a grant related to a specific fixed asset. Now, grants related to revenue. Now, what is a grant related to revenue? As I told you, you hire some employees, you train some employees, you do some other expenditure, the government will reimburse the grant. How do we present grants related to revenue? Or before that, how do we account for it? What we'll do is, whenever we receive grant related to revenue, it will be first credited to deferred grant account. First you will credit to deferred grant account. Then, in ratio of expenditure, you will transfer to P&L. So whatever is the ratio of expenditure, let us say year 3 years, 1, 2, 3. Expenditure is 10, 15, 20. So 10 plus 15, 25 plus 20, 40. And we have received grant of 100. So what you will do? In year 1, you will take 100 divided by 40 multiplied by 10. Year 2, it will be 100 divided by 40 multiplied by 15. Year 3, 100 divided by 40 multiplied by 20. So in that ratio, you will transfer from deferred grant account to the P&L. And in the P&L presentation, there are two options. One, you can show it as a credit item in P&L as other income, or you can reduce it from the relevant expenses. For example, this is 10, 15, 20, right? So what you can say, you can show it grant under other income as 40 in the first year, sorry, not 40, 0 gone, 4, 2.5, 25. 25 in the first year, 37.5 in the second year. I hope I've done it correctly. 2.5, yes, 37.5, and (40, 10, 15, 20). Sometimes I also get confused while with these ratios. 2.5, so this is 25. This is 37.5. No, so my total mistake is here. You should highlight, no? 10, 15 and 20. So this is 20 plus 15, 30, 45. So I'll change this to 15 only. So this becomes 40 and this also becomes 50. So here it becomes again 37.5. Okay. So either you can show it at gross amounts, that other income 25, 37.5, 37.5, or what you can do is from this 25 you can reduce the expense of 10 in the first year, 15 in the second year, and 15 in the third year, and show a net amount 15, 22.5 and 22.5. So either ways it can be shown. Okay, either show it on a net basis or on a gross basis. Right, so we are done with two parts: grant related to non-monetary assets, grant related to fixed assets. We have also discussed grants related to revenue. Then we have grants in the nature of promoter's contribution. Now, this grant in the nature of promoter contribution, what you have to understand is, it is not a grant related to a specific asset. It is not a grant related to a specific land or building or machinery. What they have said is, you set up the entire factory. You set up the entire factory. We will give you 30 crores as grant. Now, for which asset have they given us grant? That is not known. If that is not known, or it is given with reference to the total investment in an undertaking, by way of contribution towards the capital outlay. Capital outlay means whatever you have spent. Then in that case, what you will do is you will credit it to capital reserve. So grants in the nature of promoters contribution are credited to capital reserve. Now please remember, from this grant that you have received and which has been taken to capital reserve, you cannot distribute dividend, you cannot consider as deferred income. You cannot take it to P&L because it is not related to a specific asset, it is not related to revenue, it is not related to a specific expenditure. It is in the nature of promoters contribution. Promoters means as if they are building the business. But one thing that you have to understand, here a refund is not expected. See, if I invest in a company, if I am an equity contributor, I expect some dividend from that. In future, I expect the repayment of capital, or when the company gets wound up, I'll get the money back. But this promoters contribution, which is a government grant, this is not expected to be refunded. So the simple thing, take it to capital reserve, no dividend, no deferred income. Straightforward. Okay. So what if you refund it? If at all it becomes refundable, you will debit capital reserve and you will credit back. Okay. So this is when you refund the nature of promoters contribution. How do we treat grant related to revenue if it is refunded? Same logic. Whatever is the balance in deferred grant account, first we will debit that. We will credit bank with the full refund and balance will go to profit and loss account. Disclosure requirements, accounting policy adopted for government grants including method of presentation, nature and extent of government grants recognized in the financial statement, including grants of non-monetary asset given at concessional rate or free of cost. So this is more of a disclosure. Give a couple of readings. Don't break your head too much in remembering. So one thing what you have to understand is, for 2 marks, 3 marks, 4 marks question, what is the time we can spend? Okay. Out of so many standards, there are so many disclosures and there will be one question on disclosure. If at all it comes for 3 or 4 marks. So I feel the time you spend to learn the disclosures by heart is not, commensurate, I would say, or is not comparable with the effort that you would put or the marks that you would get, right? So, each standard, like when you go to further standards like related parties, there's a lot of disclosure requirements, then AS19, there is a lot of disclosure requirements. So what you have to do is, you have to ensure that, yes, is the time that I spend in remembering all of those things, in my energy that I spend in remembering all of those things, how much marks can I expect? So accordingly, you should plan out. Okay, just give 1 or 2 readings in the exam. If something comes, just write few disclosures that you can remember. That is more than sufficient. So, any questions? No questions? Okay. Oh, Jayanti had mentioned that it was 45. I didn't see it. Right. Don't make those mistakes in exam, so you'll not get marks. Okay. Say this. 5 marks. And it is 5 out of 5. It will take 2 minutes extra, 3 minutes extra, 5 out of 5. So this is how we have to plan for our aggregate scores. Okay, that is how we have to plan for our aggregate scores, how to score extra. Okay, so A Limited purchased a machinery for 75 lakhs, government grant received towards the machinery is 10 lakhs, residual value is 5 lakhs. So this we have already done. At the beginning of the third year, amount becomes refundable to the extent of 8 lakhs due to non-compliance. You are required to give journal entries for the first year and the third year in the books of A Limited. Now here they are saying beginning of third year. So depreciation should be charged till end of second year. So that is how you have to do the calculation. Depreciation for 2 years, government grant becomes refundable. Okay, and third year also depreciation should be charged. Now here this is again 5 marks again, same type of question. XYZ Limited received a government grant of 100 lakhs for an acquisition of new machinery costing 500 lakhs. 100 lakhs is the grant. Grant received was credited to the cost of asset. Means 500 minus 100, now we are showing it at 400. The lifespan of the machinery is 5 years. Machinery is depreciated at 20% on WDV method. The company had to refund the entire grant on 2nd April of 2017. So purchase on when, which date? 1st April of 14. So 14, 15, 15, 16, 16, 17. 3 years have gone by. 3 years have gone by. So do we need to calculate depreciation for 1 day? No need to do. Okay, don't do that in the examination, not required. Right? For non-fulfillment of certain conditions which was imposed by the government at the time of approval of the grant, how do you deal with the refund of the grant in the books of XYZ as per AS12? Now here what you have to understand is the question says, how do you deal? Here if you see the difference, you are required to give journal entries. Requirement understanding is very, very important. Requirement understanding is very, very important. Here, even if I don't explain theory, I will not lose marks. But here, how do you deal with the refund of grant? Here I have to tell how will I deal? How will be the, how will I deal with the refund of grant? So when I say how will I deal with the refund of grant, I have to give a small theory explanation also. Of course, I have to do the workings, I have to give the journal entries, all of that, but I have to also explain how do I deal. So requirement understanding is important. This will be 1 mark for you in the exam. And 1 mark is the difference between 39 to 40, 59 to 60, successful to unsuccessful to successful. Okay. According to AS12, amount refundable in respect of a grant related to a fixed asset, if the grant has been credited to the cost of fixed asset, should be recorded by increasing the value of the asset by the amount refundable. Right? So that is what you can explain in your own words. Even if you write in your own words, the examiner will give you marks here. Okay. Now, cost is 400. Depreciation for the first year 20% 80. Then you get the book value at 320. Then again depreciation of 20% 64. Book value 256. Again depreciation 20% 51.2. Book value 204.8. Now, if you directly want to compute, see, this is a 4 or 5 mark question. You can do this step by step calculation if you have time, or what you can do is amount at end of 3rd year, that is what we need, right, is equal to 400 multiplied by, what is this, 20%. So 0.8 multiplied by 0.8 multiplied by 0.8. So if you do that, 400 multiplied by 0.8 multiplied by 0.8 multiplied by 0.8, you get 204.8. So this also can be done for your examination. Okay, or you can do 400, 20% of 400 is 80, 400 minus 80 is 320, 320 ka 20% is 64. Like this also you can do, or like this also you can do. Both the ways are acceptable, right? So carrying amount is 204. How much is refundable? Refundable is, here is the refundable amount. The company had to refund the entire grant, so entire 100 has to be refunded. So what we will do? We will add 100. We will add 100 as refund of grant, and the book value becomes 304. After the refund, 20% will be charged on this particular amount. Okay. So you can also pass an entry saying, so entry for refund. On safer side, fixed asset debit 100 to bank debit 100, to be on the safer side. Now, in this question itself, I will tell you, if it was a deferred grant account, how should we handle it? If it was a deferred grant account, how should we handle it? Okay, if it is a deferred grant account, deferred grant amount is 100. Transfer to P&L in the first year is 20% of 100, that is 20. So now you are left with 80. Transfer to P&L in the second year, 20% of 80, that is equal to 16. So 80 minus 16 is 64. In the third year, 20% of 64, that is 12.8. So the balance left is 64 minus 12.8, 51.2. Or what you can do directly, 100 into 0.8 into 0.8 into 0.8. That also can be done. Okay. 51.2 is the balance. We had to refund 100. So first you will directly write to bank 100. Deferred grant 51.2. Balance goes to P&L. So P&L will be 100 minus 51.2, 48.8. Okay, so this way it can be done. They have generally not asked on this, but still, you can consider it for your understanding. See again, similar question, number 25 marks. Same standard question is what you will see. Here they have said past journal entries. So you have to pass for all the years. Again, same thing. Purchased a machinery on 1st of April, 130 lakhs. Useful life, 4 years. Government grant, 40 lakhs. Salvage value at the end of the useful life is estimated to be 60 lakhs. Decides to treat grant as deferred income. You are required to calculate the amount of depreciation and grant to be recognized in P&L for the year ending 31st March 17, 18, 19 and 20. Follow straight line method. So same thing what we have done, just a variety, no refund. Then they have given specific thing like they have received following grants from government during the year ended 31st March. 120 lakhs received as subsidy for setting up an industrial undertaking in Medak, a notified backward area. So this is in the nature of promoter's contribution. 15 lakhs from central government on installation of effluent treatment plant specific to a fixed asset. 25 lakhs received from state government for providing medical facilities to its workmen during the pandemic. They want you to advise treatment of the grant in the books. So government grants which are in the nature of promoter contribution, which are given to with reference to the total investment in an undertaking or by way of contribution towards the total capital outlay. So these things you have to remember. If it is towards total investment or towards capital outlay, which is in the nature of promoter's contribution, so it should be credited to capital reserve. So do I need to write such a long paragraph? No need to write, but capture the essence of the paragraph. Capture the essence of the paragraph. Okay. Then received from central government on installation of effluent treatment plant. Right. Now, if it is for a specific plant, what they have said, for a effluent treatment plant, it is towards a specific plant. Now here, does it mean a specific machinery or a specific plant? It is not related to total investment. They have not given anything like that. So this you can follow using the reduced cost approach or deferred income approach. Okay, so you can do it. You can do it deduction from the value of the asset, or you can show it under deferred income. Sir, if if it is towards a specified backward area and if it is in reference to the entire investment or entire expenditure, then it will be in the nature of promoter's contribution. If it is for a specific plant, you set up a specific, let's say you install, just for example, for our understanding, you install a pollution control equipment. Okay, for that if you are getting some grant, then that is for a specific fixed asset. Then 25 lakhs received from state government for providing medical facilities to its workmen is the grant in the nature of nature of revenue. So as the expenditure has been incurred, you can either reduce it from the expenditure or show the grant under other income on a gross basis. Okay, again you can have a look at this RTP questions also. Same, you see the type of questions are similar. So when it comes to theory, if a theory question comes from this standard, right, so there what you have to do is you have to classify whether the grant is for for example, if it's a non-monetary grant, or if it is a grant related to a fixed asset, or if it is a grant related to revenue, or if it is a grant in the nature of promoter's contribution. You have to identify that, explain that and give your conclusion. Okay, so normally, for example, if this is given for 5 marks, for basic explanation, so they would give maybe 2, 2 or 1, something like that, or 1.5, 1.5 and 2. Okay, that depends on the weight is given, or they may give 2 here, 1.5 here and 1.5 here, something like that. So, sir, can I score 5 out of 5? Very difficult, but you can easily score 3 out of 5. In theory questions, don't have very high expectations, because we will not be able to write perfectly like the examiner wants. So, don't have very high expectations. Okay, I'll explain some theory, then I will write the answers. Okay, so even if you are able to cover these questions and give a reading of that and present that in the examination, you will be able to score marks in this particular chapter. Okay, so subsequent all these RTPs are your, you can see these questions. So here, for example, just randomly I'm picking up. Hygiene had received a grant of 50 lakh in 2012 from a state government towards installation of pollution control machinery on fulfillment of certain conditions. The company, however, failed to comply with the said conditions and consequently was required to refund the said amount. Company debited the said amount to its machinery in 2020 on payment of the same. It also revoked the depreciation for the said machinery from the date of its purchase and passed necessary adjusting entries to incorporate the retrospective impact of the same. Now see, do we do retrospective treatment? We do not do retrospective treatment. Here we do a prospective treatment. So your thing has to be treatment given by the company. It is not correct. Why it is not correct? After the grant has been refunded, then on the revised amount, we have to calculate depreciation over the remaining useful life. It is not a retrospective adjustment. So the treatment is not correct. Something like that. Okay. So don't need. So if you write all of this, this will actually become almost more than half a page. So your point should be, if it is, say for example, this is a 5-mark question. Both the answers put together, maximum 1.5 page, not more than that. Okay. Even if you write 3 pages, the marks will not be significantly different. Right? Any questions on government grant? Or we'll move to the next chapter. Is it clear? Is your confidence increasing? Yes, okay, thank you. Right. Now we'll move to intangible assets. See, actually I wanted to do intangible immediately after AS 10, but I wanted to give a gap so that it becomes a kind of a recap when we do AS 26.